Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the recent correction to 60,000 and whether or not Bitcoin is going to see a continuation lower or a bounce toward the upside. We are also going to be taking a look at the macro charts, the total cryptocurrency market cap, and most specifically, exactly what is happening and what to expect next. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join over 600 members in our trading channel, our VIP group, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chart and education chat, our daily video help, news, and trade setup chat. Check that out, guys. Join up, and you can contact me via the pinned comment of the free channel to do that. Let's go ahead and jump on in. So as we can see, Bitcoin has seen quite a brutal move toward the downside, and this move toward the downside wiped off hundreds of millions of dollars in long liquidations. And again, a lot of people were really anticipating October to be the classic Uptober and for us to see just a massive green candle to the moon. But of course, the market doesn't necessarily always do what we want it to do, and we have to trust the charts, even if the charts are suggesting it will go against what best serves our own serving interests. And this particular instance, I was telling you a few days ago that we were seeing exhaustion develop. We had our bearish divergence develop on the 4 hour, and we were telling you we were watching for a correction into that $60,000 region and potentially even a correction lower before we see that continuation. Now, I would like to point out this correction has developed very well since then, and we have actually seen a very strong move to our first target at that $60,000 region. So it has played out fantastically, but the big question is, are we going to go much lower here? So let's go ahead and jump into it. Like I said, in today's video, we are taking a look at not only the bigger picture here on the hourly, but we are jumping into the small time frame, the hour chart, the 4 hour chart, even the 15-minute chart, discussing exactly what is happening and the key levels we are really watching for reversals to develop, and whether or not those reversals could facilitate continuations up to new highs. We're also going to be taking a look at our daily chart, of course, and like we said at the start, the total cryptocurrency market cap charts, as these are very relevant. Let's start on the market data. 24-hour volume has decreased 24% at 167 billion. 24-hour liquidations at 233 million, down 58%. As per the 24-hour liquidations, 180 million have come from long positions, so still very high considering a 50% pullback or reduction in 24-hour liquidations, and 59 million coming from shorts. If we do zoom down over here, you can see yesterday's price action, we had 450 million in long liquidations as Bitcoin tumbled toward that $60,000 region. Again, just showing how all these over leveraged longs that we were taking up in this upper range has now been liquidated. We told you as we were approaching this region, we took all our longs down over here. We're telling you this is not the time to take new longs. If you want to take new longs, wait for the confirmation of continuations into that $68,000 region. At the moment, this is a time to be taking profits. This is a time to be scaling out of those long positions. And just because you expect a short-term correction, that doesn't make you macro bearish. You can expect short-term bearish price action while remaining macro bullish, and you can expect short-term bullish price action while remaining macro bearish. Just because we see the price come down, that doesn't necessarily mean it has macro bearish implications, and just because we see the price go up, that doesn't necessarily mean it has macro bullish implications. Everything in charting and trading is contextual, and you need to take a look at the bigger picture. In this instance, we had a rise in channel formation, which resulted in a correction, which wiped out a significant amount of late longs in that September September rally. Moving over to the DXY, we'll come back to Bitcoin. We have seen a bit of a rally over here with DXY. Now again, this is of course as a consequence of the Israeli conflicts at the moment. We have seen a fair amount of development around that war at the moment. I'm not going to get into that, but when we do see uncertainty, particularly in times of conflict, we generally see the dollar go up. So we have seen the dollar rise a little bit over here, which has basically saved it from that immediate breakdown, and that level is still now going to be an area of interest moving forward. The S&P 500 has retested that weekly high support. We are watching for this level at a minimum of 5,680 to hold. Again, we can bounce into this region, then continue higher. But if we do drop under that region, we drop under the support, we then run the risk of a steeper correction. I do not think that is going to happen. I do think we are closer to the bottom on the drop for the S&P 500 before we see a continuation, as well as on Bitcoin. I do believe we are closer to the bottom here, if not at the bottom, before we see that continuation back upwards. But we'll talk about that in the video in just a moment. So that is it for the broader markets, guys. Let's get stuck into Bitcoin. Before we do, support me, support the channel, and support yourself. Get 15% trading fee discounts for life, building up to 45%. You can sign up to the links down below. Any of those exchanges down below, BitGet, BitUnix, or BingX, will give you those discounts. You have to sign up via my link to get it. Go ahead and sign up. Click the link, 15% trading fee discount. Support the channel, support the videos, and support yourself. We'll play an ad and we'll jump back into it. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back in. So let's start on the short term and discuss the key levels we are watching, the key resistances, the key supports, the key reversal points that we're watching for Bitcoin. We'll also be taking a look at the immediate price action soon after. So this is going to be our 4-hour chart. Again, if you have been following me, you would know we were calling for a correction at the point of which that 4-hour RSI broke down. This was right up over here. We're telling you, we saw bearish exhaustion. If we see the RSI break down, we would see a loss of this monthly uptrend. And as a consequence, we are watching for corrections into that $60,000 region, with the risk of a worst case scenario being a liquidity grab into 57 before a continuation. But we have now reached our first major reversal point. This is going to be that 60,000 liquidity zone, which we have seen a retest of 59,950. We have still got two scenarios from here. Scenario number one is still going to be the worst case scenario. Again, we'll discuss that in the short term analysis in just a moment, but that would result in the price action wicking into a stronger low, which is going to be 0.2. We have 0.1. This is 0.2. This is 0.3. Our second point of the rising wedge formation, deviating under that region before we see a continuation higher. That is going to be worst case scenario. Now, I will consider placing orders in this position just on the off chance we do see that correction. Now, as stated in our prior video, the most likely reversal point is going to be around the 60K region, which is where we are now, as that is where we have the retest on the daily of the midline of the macro descending channel formation. So this is going to be the most likely scenario, or the most likely reversal point for Bitcoin. However, on the off chance we do see a loss of this region, it is very likely we are going to see a strong and steep correction under our 0.2 horizon channel, resulting in liquidity grab at 57K before we then see the continuation. So again, trading is not always about being correct. It is about having different possibilities identified and having set premeditated plans for those possibilities, which you can execute if those scenarios play out. So in this instance, we might not see 57,000, but if we do see 57,000, we understand the possible implications of that, and we understand how we can benefit from that move if it occurs. So that is going to be worst case scenario. I want to get that off the chocker block. So taking a look now At the current price action, this is going to be our short-term level. This is going to be our $60,000 region. Now, you can see already, guys, on the 4-hour chart, we do have a very weak bullish divergence developing over here, which could be indicative of the price starting to show some signs of bearish exhaustion. This is what we kind of expect as we approach these liquidity levels. We do start to expect the volatility in the price action, the bearish volatility, okay, meaning the angle of the trend, okay, and the depths of our lows start to become more shallow. We expect to see selling pressure begin to dry up a little bit, but that necessarily doesn't indicate we are going to see an uptrend develop, just like exhaustion doesn't indicate we are going to see a downtrend develop. It is just an indication that if this developing exhaustion, this bearish exhaustion continues to develop, we are more likely to move into a reversal. So what are we watching for a proper reversal? We are watching this current downtrend in the price action, this diagonal trend line on the hour chart is going to be a representation of the downtrending price action we have seen over the course of the last 5 days or 4 days. If we want to see 60,000 act as a reversal point, which we are seeing indications of that with our bullish divergence. Again, we've got our bullish divergence over here. Let's draw that in. We are seeing bearish exhaustion as a consequence of our bullish divergence. We are seeing volatility drop as the price action moves closer to the 50 EMA. What we want to see for reversal to be high confidence and for us to see a continuation, we would want to see this downtrend break. It is literally as simple as that. If this downtrend is able to break, we would then see a likely continuation higher, marking 60,000 as that bottom and that reversal point. However, while we remain underneath this downtrend, this diagonal trend line is still a representation of the expected trajectory of price action, meaning if we sustain below the downtrend and drag this trend line out, the price action will likely continue along the trend line in whatever fashion until it eventually breaks that trend line. So we're watching for a break to indicate a bullish reversal. At the moment, we are seeing a early sign of bullish, or should I say bearish exhaustion, which is an indication that the sellers are kind of losing a bit of steam. They haven't quite lost the trend yet, but they are losing a little bit of steam. And if that does continue, we may get a full-blown reversal. So that is what we're watching for. Until that, we are open to the possibility. So until we break that hour trend line, we are open to the possibility for a continuation back into this 57. And we know that if we see that, that is when we're expecting that strong reversal. So reversal number 1, 57K. Reversal number 2, hourly breakout on the downtrend of Bitcoin's price action. Until either of those scenarios happen, the possibility for a 57K retest is there. It is a very real possibility, and this does not impinge on the macro bullishness, as the macro bullishness of Bitcoin is inherently going to be derived from its overall price structure over the last 5.5 months, as well as our macro technical levels, which we are very much sustaining above, which we'll discuss in just a moment. That is the short-term price action for Bitcoin, guys. I would not be aping into longs over here. Now, you don't have to listen to me. Do what you want to do. Personally, I'm not aping into longs over here. I took all my profits on my longs over here. I've been short since. I've got a very small amount of high-risk longs in play, which are more scalp trades, and mostly short on Bitcoin right now, but I'm waiting for those corrections to really flip again, or waiting for that trend to end to really flip. You want to trade with the trend, of course. That is a short-term price action, guys. Pay attention to those levels. Let's jump over to the daily. So again, like I said, we are at a pretty significant level, which is going to be the midline. The midline is generally considered a point of major confluence, where we do see the trend shift from continuations into continuations down. In this instance, we have found support on the daily candle. Another reason why I do suggest that if we see a breakdown, we would see a strong and quick flush before we see a continuation if it were to occur. But again, the midline is losing significance, particularly over the last few months, as the breaks and continuations have been a little less significant than what we have seen in the past. But I guess an important note, what we have seen is we have seen a break over that prior high. So we take a look at this prior price action, right? We have these lower highs, and with that we have these lower lows, right? What we have seen now is we've seen that trend kind of break. We actually established a a higher high. We've got a higher high over here in price action. So even if we see a drop down to 57, that will actually establish a higher low, right? We'll have a higher low over here. So this is really developing that move toward the upside eventually, which we are still expecting. Even if we see that move to 57,000, which is why I said it is unlikely to have macro implications on the price action if we were to see one more steep correction to 57,000. The macro charts are very much still bullish. Now, again, for us to invalidate this structure, a daily candle close below will be required for that to occur. Keep that in mind. Just as for us to validate the continuation, a daily candle close above the structure will need to occur for that to actually happen. I've been saying that since the start of this channel. A lot of people think a lot of people just saying, I think we're going to 80,000. No, there are actually specific triggers that need to occur for that expectation to actually come to fruition. But again, a lot of people don't like to listen. They just hear what they want to hear. So again, a daily candle close above the descending channel is what is required to validate the move upwards, just as a daily candle close below is what is required to invalidate the bullish consolidation, which we know as a descending channel formation. Macro bullish triggers on the 2 week is going to be our baseline of our Ichimoku cloud above good, below bad. Keep it simple. On our weekly chart, macro bullish triggers are going to be our Gaussian channel in Ichimoku cloud leading span A and upper band, above good, below bad. Keep it simple. Again, there's no need to overcomplicate it. We've got years of data off these indicators showing how breakdowns and breaks up result in macro directional shifts in the price action. We do not need to overanalyze. We can keep it simple and trust the charts. Moving over to the total market caps and levels of significance we are watching. Again, the total 3 mimicking Bitcoin. Not too much to say. We're retesting a midline just as we are seeing on Bitcoin. The altcoin market really led the market over the last month, really pushing much higher than what a lot of people expected. Actually, momentarily breaking through that channel, but dropping back in. Not a great sign for altcoins. Overall, I'm not very bullish on altcoins right now. I was bullish on altcoins on the September move up, but personally now in this recent rejection, I'm holding off. I'm a little bit more cautious, and I recommend being a little bit more cautious at the moment as we have, again, invalidated this structure essentially. So watching how that develops first and foremost will be a wise move. Thanks for tuning in, guys. Have a fantastic day. Catch you in the next one. See you then.